Ladies and gentlemen, welcome back to the channel. At the time of recording this video, you are going to be getting big tech earnings coming out from Apple, Amazon, and Meta. Depending on how those earnings come out, will likely dictate, at least to some degree, how markets trade tomorrow. If there is any crazy developments with any of those earnings, a big clap-a-rooney or big rise, I will make another video to let you guys know exactly what that is. But I don't think that's necessary because I think we have a pretty good idea of how earnings are going to come in, probably mostly in line with expectations. But whether or not we get big upset somewhere, or AWS fails with Amazon, or Meta spent too much money on the metaverse, and who knows, right? I'm sure things are going to come in line, though. That leads us to the next question of what happens next. Coming even tomorrow, we are going to have some big economic data coming out, and we will go over the expectations markets have for that one in this video. Goldman Sachs also has a very interesting expectation for tomorrow's data point. If they are correct, stocks could potentially love it, maybe hate it. We'll have to wait and see. Nonetheless, hit the like button as well as subscribe to the channel. If this is your first time here, consider sticking around a while. So first up, we have our earnings calendar. As I said in the last video, hopefully you watched it. If you did not, I'll give you a brief recap. Apple, Amazon, Meta, Altice, United States Steel, the Clorox Company, Skechers, Deckers, Orchard Island, and Microchip that report earnings today. Tomorrow, pre-market, ExxonMobil, Chevron, Bristol-Myers Squibb, AbbVie, Cigna, Regeneron, Charter, CBOE, AON, and Grainger that all report pre-market. So, again, not expecting much tomorrow as far as earnings. Today and after hours, all about the big three. Now, Meta has a history of moving quite large on earnings. Amazon can move quite a bit as well, up or down 10%, I think is pretty much the maximum there. And Apple tends to move like 2 to 3%. Apple's the bigger one because they're about 7% weighting of the S&P, but Amazon still about 5% of the S&P, and Meta's about 3%. So still some sizable percentages in those companies as well. But this is really going to tie in the theme of how successful was earnings. I mean, if Apple, Amazon, and Meta account for almost 15% of the weighting of the S&P, if they have disappointing earnings, that's not going to be so great. Expectations are pretty high heading into those earnings, especially for Amazon and Meta, so they could be the bigger disappointers in my personal opinions. Apple just meeting expectations is going to be enough. Amazon and Meta meeting expectations may not be enough. If they miss expectations, that's a whole nother story. So that's a little brief overview of what is the situation with earnings. I want to put that at the beginning of the video just in case you are seeing earnings coming out right now and you're like, what the heck? You know, what was going to happen? And that's a little bit of a preview. Now, today you did have some data that came out, which was actually pretty interesting. You had ISM Manufacturing PMI for the month of January. This came in at 49.1. The estimate was 47. So much better than expected. That's good news. Manufacturing employment came in at 47.1. Estimate was 48.2. So that was a little bit on the weak side. Construction spending came in at 0.9%. Estimate was 0.5%. Better than expected. New orders came in at 52.5. Estimate 47.4. That's really good. But prices, this is where it gets a little on the rough side, especially for the Fed. ISM manufacturing prices came in at 52.9. The estimate was 45.9. If you're in the rate cut camp, you gotta start thinking twice at this point. If we continue to get data like this, that is good, showing the economy is doing well, but also potentially inflationary, the Fed may not cut rates in all of 2024. While the markets are pricing in 4 or 5 rate cuts, the writing's on the wall where if the economy holds up, if inflation remains persistent, the Fed might not cut rates at all. That could be a big problem in 2024. We'll have to wait and see. Ultimately, the economy is more important, whether or not we head into a recession or we start seeing more layoffs. That's going to be the important part. But yeah, I mean, as of right now, I think I don't know what I think anymore. Okay, but if something does not change, inflation either plummets or the economy plummets, you're not getting rate cuts. So that could be a little bit of a problem. Now, specifically for AMC stock here on the day today, AMC stock is up about 0.25%, not doing a whole lot of a lot, currently at $4.06 per share. We'll come back to the technicals in here in just a second because AMC stock continues to be oversold, which is pretty spectacular. I think that sets us up for potentially a large bounce coming here soon as well. I think the ultimate bounce of bounces is if Adam Aaron does give us a commitment to not diluting shareholders. I think that's ultimately a big checkmate to short sellers that are basically counting on more dilution. I mean, if you're short AMC at this point, you got to be counting on more dilution. It's not like there's high expectations for the box office. There's very low expectations for the box office. So, I mean, that's not going to be necessarily terrible news once that comes out. It's not going to catch anyone by surprise. Yeah, I would be a little bit nervous if I was short in AMC stock as of right now, considering the stock's trading at basically all-time lows. As I showed in the last video as well, the latest AI investor sentiment survey is shocking. 49.1% of investors that are bullish. Last week it was 39.3%, so almost a 10% jump. Neutral investors dropped about almost 10% as well, about 8%, from 34.6% to 26.4%, and bearish investors dropped from 26.1% to 24.5%, dropped about 2% there as well. So some very strange things that are going on right here. It seems like everyone is over their skis for stocks right now, and that probably continues for a while here. If you take a look at TLT is up 1.79% today. That means that when TLT rises, bond yields fall. So bond yields are falling today, and that will be a positive for stocks like AMC, right? That will turn into a positive. And the really question is, when does that happen? Now, little fun fact for everyone that does not know this, about 30% of debt in the Russell 2000 is variable. So variable is not correlated to Fed policy. It's correlated to 10-year, 20, 30-year treasuries, right? More so to 10-year treasuries. So as 10-year treasuries are falling in yield like they are today, that directly helps out the interest payments that Russell companies have to pay. Now, 10-year treasuries today down about 10 basis points. That is why the S&P 500 is doing well, up about 0.7% at the time of recording this video. I'm expecting well over a 1% move coming tomorrow based on the data that does come out and subsequently big tech earnings. Now, as far as the data coming out Friday, which is tomorrow, expectations are 180,000 job ads for the non-farm payrolls. Last month was 216,000. I'm sure last month gets revised down, maybe the last couple of months. So really, how strong are things if you're just seeing revisions after the fact? Nonetheless, markets don't care about revisions. We only ever focus on the headline number. Maybe at some point revisions will start to matter. We'll have to obviously, wait and see when that moment does arise, but it's definitely not now. So 180,000 is the expectation. Now, Goldman Sachs believes that we could see a number coming in at about 250,000 job ads. Now, that would be insane. Goldman Sachs says, we do not place much weight on the ADP miss because of ADP's negative correlation with BLS private payrolls since the introduction of the new methodology. We left our non-farm payroll forecast unchanged at 250,000 or more. Oh my gosh. If you get a number like that, guys, yeah, the Fed is not going to be in a rush at all to cut rates. We might not be looking at May or June, but potentially even later than that. We're talking third quarter, maybe even fourth quarter. If the labor market continues to do well, the economy continues to do well, and inflation just stalls out here, that's a problem. That could be a big problem for markets towards the end of this year. So I think that's something we want to be watching a little bit more closely because, Yeah, that could be a big problem. So 250,000 job ads. Let's say the number does come in there, and that would be 70,000 higher than expected. Well, again, that's good news on the front of the economy. Economy's doing well. That's bad news in terms of rate cuts. You're going to get more pricing out of the first rate cut. That potentially would be negative. Now, for March, expectations are for a pause at 59% odds, 41% odds of a rate cut. For May, firmly pricing in a rate cut at 57.2%, and odds of a continued pause at 5.8%. Let me tell you right now, if non-farms come in at 250,000 plus tomorrow, markets are probably going to aggressively unprice the May rate cut. Yeah. And what happens with that? Probably stocks come down 1 to 1.5% tomorrow. That would be my expectation, let alone if, big tech earnings come in, bad. Well, that could be a totally different story. You could be looking at down a lot more than that. And just for context, let's say theoretically it's not going to happen. It's very unlikely to happen. But let's say Apple fell 10%. Just Apple's market weighting of about 7% of the S&P would cause the S&P to fall 0.7%. Let alone the NASDAQ, that would cause like a 1% down move. Let alone Meta, let alone Amazon, let alone Microsoft or Google or any of the other sympathy moves that you would see based on a drop like that, right? So that's why it's going to be very, very, very vitally important to see exactly what does happen and ultimately the non-farm payroll report that comes out tomorrow. Now, 10 and 2-year yield curve is not uninverting like I thought it could, because you are seeing the 10-year dropping more than the 2 years. So that's typically good, but you are seeing the 2-year falling quite a bit. So you are not seeing that an inversion. You're inverted 28 basis points, which this is actually good news, because when you go uninverted is when markets typically have those recession fears, or at least when you're about to go into a recession is actually when you do go negative. So that's a little bit of good news, I would say, here on the day today. Again, big focus being on treasuries and the collapse that you are seeing in yields, which just means prices are going higher. Another big story of the day today as well is KRE. Take a look at this. The regional bank situation may not be over yet. We know New York Community Bank is having a little bit of problems right now. It's a little problematic, if you will, but a lot of other banks are down big time today. You are seeing the KRE dropping about 2.84% still, and you were much lower than that at one point today. At one point today, you were down like 6% on KRE, which is the regional bank ETF. That's a problem. And the Fed yesterday, they took out the banking system is sound and resilient. Yeah, they literally took that out of the report. So what? No longer is the banking system sound and resilient? I don't know, but they took that out of the report, which is very interesting. It really makes you think, like, what's going on? Maybe the regional banks caused the Fed to need to ultimately cut rates. That is definitely a possibility that I would not overshadow at this current moment in time. Now, if we take a look at the Stonko tracker data, you got about 6,300 calls currently in the money. Out the money calls at about 76,000. In the money puts at 13,000. Out the money puts at about 22,000. So again, if you do see a big move coming tomorrow in either direction, up or down, you could definitely see the option market in AMC start to exacerbate that and cause an even larger move overall. Now, let's refresh this page and take a look at the Ortex data here. So we do have 11.02% short interest of free float, $111.81 million worth of short positions. Days to cover 1.47, 27.61 million in short positions. Or in shares sold short, 27.25 million shares out on loan, cost to borrow 1.1%, utilization of 41.34%, and a short score of 60.77 out of 100. Now, if you take a look down here at the cost to borrow max, that's at 6.9%. So you are seeing a little bit more shorting activity definitely taking place today in AMC stock than maybe what we have seen prior. And for whatever reason, we don't have any option activity from hedge funds and or institutions today in AMC stock, at least none that is getting flagged by Ortex, which I find very interesting. But good news is volume to the call side of 76.39%, volume to the put side of 23.61%. So looking firmly bullish on the day today. So there is that. That's pretty much everything you need to know as far as my expectations around the data coming out tomorrow with non-farm payrolls. I'm expecting a number somewhere around 200,000. So 200,000 would be a little bit higher than estimates. It would really push back on the narrative of Fed rate cuts, but it's not going to utterly destroy the chance of essentially a May rate cut, right? Your odds of a May rate cut are going to fall probably about 50%. It's probably going to be 50-50 whether or not we get a rate cut in May, which will be very problematic for markets if that do happen, right? Markets are not prepared for no rate cuts in 2024 or 3 rate cuts, right? We're still pricing in. Let's see. At the time of recording this video, you're pricing in 1, 2, 3, 4, 5, 6 rate cuts still. That's going to start to get way pushed out if you see the data continue to come in this strong. So let me know what you think about this information down below in the comment section. Again, I am expecting a big move coming tomorrow for AMC stock, especially, you know, if non-farms come in where Goldman expects, or if, you know, earnings come in bad, definitely going to get a big move coming tomorrow. So hit that like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. Thank you for watching and enjoy the rest of your day. I will see you in the next one.